All right, so good evening, everyone, and you are welcome to today's class. So far, we have gone through the 30 mark aspect of your exam. So far, we've done the introduction to audit and assurance. So we've done introduction to audit and assurance in terms of doing advanced audit. We've also done the regulatory framework where we learned who is an auditor and all those things, qualifications, appointment, and the bodies that regulate the auditing profession. We also went on to do what do you call it? The ethical considerations. The ethical considerations. And if you remember, we said that the ethical consideration, we use the concept of the SAFI. We use confidentiality. The last 2 years, anybody? Confidentiality. The last two is I of C and C of I, right? So integrity of the client. And lastly, C of I, which is conflict of interest. So these are the areas that are used to answer ethical issues. Then we spoke about professional issues. So professional considerations. And last week we dealt with that. Under professional considerations, the issues there were money laundering, which you have to be careful about. Also auditor's liability. And professional skepticism. And all these, you need to understand them. All right. So the third thing we did was practice management, how to obtain a client and how to maintain a client. And we went through to do that. And we added corporate governance. All right. Corporate governance. Corporate governance. So after all these things, we concluded with an engagement letter. Engagement letter, where we learn some of the things that should be in the letter and some of the things that may be in the letter. All right. So those were examinable areas we looked at. We did actually solve the past question. And so all these things that we have done, all these ones that we've done, it is 30 marks in your exams. So we have done with 30 marks of your course. 30 marks. You are done with 30 marks. So if you've not started learning, you have to buckle up. Now, we are moving on to another 20 mark session. That one is, you see, the progression of what we are doing, if you are following, we started understanding what audit is all about. The bodies that regulate audit, the ethical things you need to start adopting when you are doing audit, how an audit firm is regulated, practice management, and money laundering issues, auditor's liability. We've signed an audit engagement letter with an auditor. An auditor has signed an engagement letter with the client. Now, it is now time to actually go and do the audit. So today we are doing what we call the audit of financial statement. So now we are coming to start the audit itself. How are we going to do the audit? Audit of financial statement. The audit of a financial statement. Now, remember, you have already signed the letter, and so you need to start preparing to do the audit. Now, the issues there, what we are coming to do today embodies three major things. We will look at the others next week. Number one, we are going to see how you plan the audit work you are going to do. So we are going to look at audit planning. All right, we are going to look at audit planning. And once you plan, you are going to determine something we call materiality. So audit planning and materiality. So materiality. And we are going to discuss audit risk. The risk you are likely to face, audit risk. Now, all these things put together, when you are done, you need to gather evidence, because what you are doing is to give a report. And so therefore, whatever you are doing, the report that you are doing must be backed with evidence. So we will be doing that. Now, this part of the evidence gathering is usually a 10 marker in the question. Usually, you will have in your whole exams, you will definitely have to prove it with evidence. And you see, this side, you will be discussing audit matters. Audit matters also. All right. And this, today, what we are doing is your question 2. Your exam structure, ICAG structure is question 2. Similar to ACCA, the same thing, just that there's much of OBGs there. Nigeria, the same structure. And so you are going to do the audit matters. And usually, this thing is also like a 20 marks. So in as much as evidence is linked to the final stage of the audit, but we are doing it here. So technically, if we are able to also complete this session, then it means that you are also another 30 marks away. You are another 30 marks away. So that means that 60 mark is done. And these things I'm doing, I'll finish it next week. So it means by next week, we will take some practical sessions. By next week, you are 60 mark away from passing. Even if I don't continue, you can still pass, because we have done 60 marks. All right, now, so let's start with audit planning. Once you have signed the engagement letter, let's start with audit planning and materiality. So we start with audit planning. So you see, after you have signed the engagement letter, you don't just jump into the person's office that you have come to audit. You must start the audit from your office. You are the auditor now. You must start the audit from your office. Now, audit planning is regulated by ISA 300. So everything we are going to learn is coming from what ISA 300 wants us to do. All right. Now, what ISA 300 is saying is that the auditor, all right, must plan the audit. That is what it is saying. So the objective of the ISA 300, the objective of ISA 300, when we say ISA, it is International Standard for Auditing. So auditing is also regulated. So the main objective is that it is saying that the auditor must plan the audit. So if you don't plan the audit, you are not going according to the standard. All right. Very soon, I am working on a paper on internal audit effectiveness in the public sector of Ghana, and how we can help build the effectiveness, a proper or a resilient internal audit in Ghana. Because we check the Auditor General's report for the past 10 years, there were always issues about audit report, internal auditors. So, Auntie Edna, I don't know whether the Auditor General has commented on your work at UG here before. So you'll be part of those people who answer the questionnaires for me. All right. Anyway, that's just by the way. But you see, whether internal audit or external audit, well, of course, what we are doing is external audit, but you still have to plan. All right. You have to plan. Now, it's saying that plan the audit, all right? So you have to plan the audit in an effective manner. So you have to plan the audit. You have to plan it effectively. Now, the truth is that if you are able to plan the audit effectively, what happens is that if the plan is so clear and you are no more there, another auditor can actually come and pick the plan that you have done and continue from there. So the objective is that plan the audit in such a way that even in your absence, another auditor can actually pick it and continue from there. All right. So that is that. But one examinable area about this part is that, and it is number one, importance of planning. Importance of planning the audit work. Importance of planning. So, anyway, why do you think the auditor must plan the work? Yes, anyone? Why do you think, why do you plan in your life in the first place? Yes, anyone? Dicta, why do you plan? Mami Ajua, why do you plan?
Good evening, sir.
Yeah, good evening.
You plan in order to do things systematically so you don't do things on impulse.
Yeah, so that you organize yourself well, like you said. Yes. So those who do things on impulse, they always do things out of plan. They don't do it like they do it. So somebody said to achieve results. Okay. Uh-huh. So planning
Okay,
is
so
important. Uh-huh. Mami Adra.
to work within your scope, assuming you are working within 2 weeks, you have to plan so that you don't exceed the days, or the days won't come without you completing what you are supposed to do. So
Yeah,
to
it's
work
true.
within the scope.
So this ICA thing you guys are doing, have you planned your studies? Have you planned it?
Yeah, so
But will you be surprised to know that some people have not planned their studies? The way you are giving me importance of planning. So it is dangerous if you are doing this course and you have not even planned. Yeah, so like you said, the ISA 300 outlines about six advantages of planning. It says that when you plan well, you are able to devote appropriate attention to the important areas of audit. That's what it says. You are able to devote attention. So appropriate attention to the important areas of the audit. And it is true, this thing happens to all of us. It happens to all of us. Because if you plan well, you are able to devote proper attention to specific areas. And when you plan well, you realize that those areas we are talking about are the risky areas. So what you see is that the planning that you have done will help you to identify risk. To help you to identify the risky areas. All right. So planning helps you to identify risk. And like somebody said, it helps you to also um, kind of do things, organize things so that you can be able to perform your things in a timely manner. So planning helps you to organize yourself to actually perform the audit, all right, in a timely manner. Yeah, so that was true. Again, you realize that when you plan well, planning helps you to coordinate yourself. So that is that. Through the coordination, you realize that probably you need to bring in experts. All right, you need to bring in experts, and so you coordinate yourself and know the things that are needed, so that you will be able to figure out the expert that you need. The auditor is not a jack of all trades. You the auditor, there are some certain things like valuation that you have to bring an expert to do, so you will get to know. All right, so that is that. And in selecting the audit engagement team members, planning too is important so that you can know the level of competence of the people that you are bringing in. So it helps in selection of audit team members so that you know the level of competence and the capabilities that you need into that team. It's very, very important. Very, very important. All right. And another thing, the last thing is that it helps you with your supervision, direction, and supervision. Just a second, please. All right. So, like I was saying, if you're able to plan the work well, you will be able to direct the work and supervise the work. And because direction and supervision is done in line with what you have planned. And so, because you've done that, you'll be able to review the work against the plan. All right. So, how did you foresaw how the work will go, and now that it has ended, did it go as you planned it? So, these are the first examinable areas. Area is the importance of planning. So, you list this thing and you explain further. All right. Just try and explain further. Okay. Then we have the planning process. The planning process. You see, the planning process starts with the ethical things we have done. So you are checking once when you are, so let me say the planning process. So what goes into the planning when you are planning the work? What actually goes into it? Now we have the preliminary part, because you are planning, we have the preliminary engagement activity. And that is all that we have learned. Those things that we learned about ethics. All right. So the things we learn about ethics and the engagement letter. Those are the prelims that you do. You've done that part. But most importantly is the planning activities. The activities itself that you do in the planning. Now, this one, we have two major things in there. The ISA 300 says that the two major things or activities that goes in there are: one, the audit strategy. You must determine the audit strategy. The audit strategy. Number two is the audit plan itself. So develop an audit strategy and develop the audit plan. What is the difference between the two? When we say a strategy by definition is just a course of action. So a general way you are going to do things. So when we talk of strategy, we are talking about the overall way you are going to conduct the audit, the general terms of how the audit is going to be carried out. So that is what we mean by a strategy. The general way or term that describe the way the audit will be carried out. So the key word here is the general. How the audit work will be done. How the audit will be done or carried out. So basically, that is it. The key important word is the general. So the overall outlook of how the audit is going to be done, the overall outlook. Ladies and gentlemen, there are kind of, let me group them into, let's say, 6 things that happens in determining your strategy. About 6 things. Number 1, if you are thinking of the overall outlook, the first thing you are looking at is the reporting framework that you will use. This thing, the audit strategy, the things there are the same thing as the things that are inside the shall be part of the what do we call it, the engagement letter, with the exception of 2. You saw that the framework, it was also in the shall be part. So the framework of reporting. So the audit that you are going to do, okay, is it going to be an IFRS based, or what are you going to do? What are the entity specific requirements? The industry that the company is in, what are the specific requirements? So those things are also important. So the framework you are going to use, both the professional in terms of if IFRS, then the industry specific. All right. Number 2, another thing you should consider very important is the reporting objective and the timing of the audit. So the objective and the timing of the audit. You see, not all audits are for, we have forensic audit, we have forensic audit, we have due diligence reviews and all those things. So the objective must be clear, and the timing. In fact, we even spoke about the form of communication, the nature of the communication. You see, deadlines are important, because if I'm starting the thing, I need to let you know that I'm starting from this, I will end it at this place, and all those things. So those are the things that are considered there. So you can also add communication. So the nature of communication is also part. Objective, time, and nature of communication. Very important. Very, very important. All right. So that is that. So again, your strategy must also embody your resources. So you see, I told you that when we were doing what was that, practice management, I told you that one of the examiner's question is that what are the factors you consider when tendering for a job? You see, these are the same thing. You remember, when you are tendering for a job, talk about the reporting framework, talk about the objective, the nature, timing, talk about the resources, because it's very, very important. So and I told you that whenever you are discussing resources in any subject matter, talk about the IT resource and the HR resource. It's very, very important. All right. So that is that. So these are things that you must consider. All right. So resources, very, very important. So you can open this thing up in 6 points. All right, but I think these are the major ones that you should talk about, because aside that, you know that if in case the person is located at a very far place, you need all those things that the resources that you will need in terms of the budget, everything that you are going to do there. All right. But you remember when we discussed the things that are also at the shall be, we were talking about the auditor's responsibility and the management responsibility. So these things, what you can get out of those 2 points are the in kind of what do we call it, the risk factor inside the audit, the risk factor inside the audit. But anyway, let me clear this one. When we talk about timing in audit, we have two types of timing in audit. We have the interim and we have the final. The auditors will tell you the one that they do before the financial year end is called interim audit. The purpose is for control. They do test of control. That is what they do. Then the final audit, they do substantive testing. That is where they say, bring me this invoice, all right, and all those things. Let me see the evidence. Where is the receipt? Those things are called substantive testing. We will look at them later, all right? So these are the things that are very, very important. So from the responsibilities, like I said, the last thing I can add to you will be materiality, all right? So what is material? You need to determine what is material. All right. So these are four key points. You can develop them into 6 if you want. All right. But these are the 4 key points you consider when you are talking about audit strategy. It is also the things you consider when tendering for a job. The same thing. When tendering for an audit work, the same thing. You consider the framework. You consider the objective of the audit, the timing. Like I said, you can open this thing up and make it 6, all right? The timing, the nature of communication, resources, materiality, all right? So these are what goes in there, all right? Now, once the strategy is established, then it means that we can now go into the audit plan. Now, the difference between the audit plan and the audit strategy is that the plan tells you the specific thing to be done. So whilst this one is the general way the audit is going to be done, this one is the specific way the audit is going to be done. Keyword, specific. What do we mean by specific? The specific will outline what audit procedure is to be used. What audit procedure is to, and we will learn audit procedures, all right? We will learn it when we are doing evidence next week. All right. What procedure are you using? Now, if you know the procedure, the next question is that who will do the procedure? Who? Who should do them? Who should do them? The next thing is that how should it be done? How should it be done? And this is where we talk about sampling. How should it be done? Then, lastly, when should it be done? When? And that is when we talk about the interim. So this one is about time. So where you talk about the interim and the final. All right. So basically, that is that. So one is a generic, the other one is specific. So if you have been audited before, or if you are an auditor, you realize that when they come today, like they come to your office, for example, let's say they come today, they say that they are going to work on your, balance sheet is asset is equal to capital plus liability, or equity plus liability. They come and they say they want to audit your assets. Assets are plenty. So what will happen is that, Ama, work on their fixed assets, their non-current assets. Work on them. Do it from 8 a.m. to 5 p.m. when we get there. All right. How you are going to do so? This will be part of your final audit timing. Final audit. Use this approach. So your supervisor will tell you the approach. When you finish, sync it. So you see that the strategy today is that when we come, we are auditing assets. But who is doing it? What audit procedure are you going to use? So probably you will say use the audit procedure, I'll use the vowels to teach you. So probably you say use analytical procedure, all right, or use inspection, inspect the document, or recalculate the figure. So you tell the person what specific thing is supposed to be done, all right, inspect the document, inspect the receipt, inspect the invoices. So you've told the person, and Amma is the one doing it. All right. So sample, okay, don't do all of them or do 90% because in audit you can't do absolute assurance. So do 90% of the audit, sample some of them and do it. You can say sample the one that are of the higher values and audit them. So that is specific. But our genealogy was that when we come, we are coming to audit the asset. That is the genealogy. That is what we purported to do. So that is the difference between audit strategy and the audit plan. I hope it is clear. I hope it is clear. So you realize that one talks about the scope, the strategy talks about the scope, and so you can say framework or scope. All right. Then the other one talks about how you are going to implement it. So one talks about what is supposed to be done, and the other one talks about how you are going to do that thing. So generically and specific. Any question about that? Please, the examinable part, the exam question about what I have done is that the examiner will ask you, what are the things you consider when tendering for a job? Like I said, these are the things that you talk about, including what we discussed last week. All right. So take note of that. Or what audit plan? He will give you a case, all right, and say what strategy or plan will you adopt to handle that way. So you will talk about these major headings and write on them. Please, is that clear? Is it okay? Mami Ajua, any question? Mercy, any question? Mujib, plenty people here. Yaira, any question? Osman, is it okay at this point?
No
Because
question, please.
yeah, because per what I'm trying to do today, that is this one is gone. This one is gone. The next thing I'm going to look at will be audit risk. Then I'll come to the materiality. All right, audit risk. Audit risk. And the audit risk, I use the marriage to analyze audit risk so that it will be very understandable for you to get. So let's talk about audit risk. Audit risk. All right. And what is audit risk? Audit risk, AR. What is audit risk? Audit risk simply means that the risk that the auditor might give a wrong opinion. The risk that the opinion of the auditor might be wrong. Let me write it like that. The risk that the opinion of the auditor might be wrong. Those of you who are in the Christian fraternity, you've heard these things before, right? That there's a risk that you marry the wrong person. You've heard it before, right? The wrong person, the wrong person. So in marriage, it happens. They said there's a risk that you marry the wrong person. I actually don't believe in that word, wrong person. I don't believe in the word wrong person. There's nothing like a wrong person. Maybe the way we talk about it, in the context of what we talk about it, it is acceptable, but there's nothing like a wrong person. Probably a wrong relationship or the coming together is what is the problem, but there's nothing like a wrong person. The person you think is wrong is right to somebody. Is that not it? But in the context of what you want to do, we can say that. So in marriage too, like I said, I use marriage to illustrate this. Anyway, so what will make you say somebody married a wrong person? Let's discuss that. And please, it's the same thing as the answers you are going to give. We will just shift it to what we are doing. So, Dicta, what will make one say that somebody married a wrong person? What do you think will be the reason?
If they don't share the same opinion or believe in the same doctrine.
Okay. All right. So that is fine. Bishop, what will make somebody say that? Mami Adua, Bishop.
For you to say that you've gotten the wrong person, probably you don't have an inclusive decision taking.
You can't make decisions
together. That may warrant that fact. But if you understand each other and probably the man understand when to say, oh, I have agreed. The woman understand when to say, I have agreed. And when there is this bossy nature, I know, it cannot last.
All right. Yes, Mami Adua, anything to add? Madam Soa, anything to add? Because these days, it is something that is in the system, and it is even frightening now. The way they talk about it, it's like when you are going to marry, you are afraid. Is that not it? That's what is happening now. That's what is happening now. But you see, in the old days, when our parents were marrying, they didn't know themselves that much. But they married, they gave birth to us, we moved. Is that not it? Whatever you say, lack of knowledge or anything, some of them lived perfectly. Is that not it? So now there, Mujib, Madam Sowa, what do you have to say about this whole thing of wrong person, wrong person? Anything to add? Anyway, so if that is the case, it's also possible that you might give a wrong opinion on something. It's also possible that you might give a wrong opinion. And we attribute it to two main reasons why the auditor's opinion might be wrong. Two main reasons why we think you might marry a wrong person. One is called the risk of material misstatement. Risk of material misstatement, RMM. Risk of material misstatement. All right. So this one is a combination of two things: inherent risk and control risk. Risk of material misstatement. And I will explain it in terms of, this one, it is firm specific. It is the entity specific, client specific. It's about the client. Not the audit firm, but the client. Then the last one is detection risk. That is about the auditor. This one is about the auditor. Detection risk. It is the auditor specific. So the mistake can be about two things. One is the entity. Two is the auditor. Now, who gives the opinion? It is the auditor, is that not it? The entity. So let's say if a man is going to marry a woman, and the man is supposedly going to marry a wrong person, then it means that number one is the person. Number two is you, the man, going to marry the lady. So one, it comes from the woman you are going to marry. Two, it can come from the person who is going to marry the woman. Now let's look at the woman we are going to marry. Let's look at the woman we are going to marry. Now, the woman we are going to marry, one of them is the hidden features of the woman. Who the woman is, the hidden features. For example, the person is an Ewe, the person is a Fanti, the person is born short, the person is dark. All those things, there's nothing the person can do about it. You realize that it is inherent. It is inherent. So when we are talking about the inherent risk, we are referring to the nature of the business. So the nature of the person, nature of the business, nature of the business. So that is it. You see, the females, they have their own peculiar nature. They have their own peculiar nature. They go through a cycle, and I studied that cycle. And when you study that cycle, you stop being hard on them. It's just that they don't want to calm down for you to have that kind of emotional pity for them. But actually, that is what it is. Because if you study the cycle they go through, the menstrual cycle, it doesn't start one day. It doesn't start boom one day. It starts like 2 weeks too. So, and that thing affects their brain. If you like, take your time, go to YouTube and search the impact of a menstrual cycle on the neural system, the brain, central nervous system. You will see. So sometimes you will see that the way they act, we the mind, we will say they don't act radically. Yeah, that's how it is. If you study it, you will see it. Me, I'm studying it. Yes, very soon I'll tell you the reason why I studied it. So that's how it is. The nature of the person, just because of the nature of the person, you see that it's like, so just because of the nature of the business. For example, I have worked in a petroleum company for a filling station. I used to work be the accountant of, I was at the accountant of a BDC, but I used to be a supervisor of an OMC. For example, you know the filling station. When you go there and you buy fuel, how do you pay? You give them cash or you give them card? Most of you give cash, don't you? Bishop, when you buy fuel at the filling station, how do you pay? You pay cash or you pay with card?
Some card, BBOB.
You have card, but most of us use cash. In fact, me, if I'm behind you and you get to the filling station and you are paying with card, I get angry. You are annoying to me because you delay the process. Because I'm a Ghanaian, and sometimes cultural effect, we are now trying to evolve above that. Yeah. So when you give money, quack, 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 you go. The card, sometimes you realize that the system, the POS has this problem, the money is not coming and all those things. Me too, I'm in a hurry. I want to fuel and go. All right. But look at the filling station where they pay cash. See, one of the policy we had is that when the cash is up to 700 Ghana cedis, the person should go and deposit the cash in a safe. Now, let me give you one illustration that happened in the company. One of the pump attendants came to the head office and said that life is hard for him. He wants a loan, 10,000 Ghana cedi to rent. So the company should give him a loan and deduct it from the salary. The company decided not to give him the loan. They decided not to give him. Now, do you know what the guy did? He's at the filling station. Anytime you pay cash, he's piling it up, piling it up, piling it up, piling it up, piling it up. And he was at a very, Tema was the place. And the fuel, they bought Tema. You know, the big trucks that are removing the things from the port. Then when they buy fuel, it's a lot. And so the guy had it was about 15,000. Then he deposited 5,000 for the company into the safe, and he took 10,000, and he was gone. He ran away. And you see, they tried to arrest him, and they had him. When they had him, he said that he used the money to pay the rent. So the company should allow him to work so that they can deduct from his salary. If you arrest him, you won't get the money, but allow him to work so that you can deduct from the salary. Do you think the guy did justice, or what do you think about that anyway? Or the company is just, the company was so unfair. So what the guy did was, okay, what do you have to say in that scenario? He didn't, he said he's available, he will work, deduct it from his salary. What do you say to that? Bishop, you think the guy did right? No, right? Or next time.
Oh, no. The guy needs to exercise patient, bro. Like some of us, we slept in Lotto kiosk.
So but he's not running away. He said that. Dictor, what do you think about it? And he said you work, you can deduct from the salary.
That is like saying if persuasion fails, force is applied.
That's all. At the end of the day, he will pay. He said he will pay. If you had given him the loan, he would be working. But like he said, you said if persuasion has failed, then force will apply. So just because of the nature of the business, some things can happen. So because he's seeing cash, do you think it was, if everything was POS going directly into a soft account, you could have done that? No. So just because of the nature of the business, and number two, the nature of the transaction. All right, the class of transactions, the way they post their transaction into the system, you can debit instead of crediting, and it will create an error. All right, so these are inherent risks. But ladies and gentlemen, I always tell my students that anytime, you see, we say that the inherent risk comes because of the nature and the class of transaction. You can actually add what do we call it, experience and management integrity to it, experience and their integrity. But I tell students that anytime you are asked a question about inherent risk, use what I call going concern issues. Issues on going concern. Use them. What do I mean? You will look at three major things: financial issues, and please take note of this because we will come back to this at the latter part of your course. Operational issues, then reputational or compliance issues. Reputational or compliance issues. All right, so we can use this place to actually check it. All right, so that is that. So now, what do we mean by this? What we mean by this is that anything that will let the company go down, we are looking at financial issues. So talk about the elements of financial statement. There are 5 elements. We have assets, we have liabilities, equity, income, and expense. This is the easiest way you can identify it. See, whenever your asset is going down, it means that there is a problem. Whenever your liabilities are going up, it means there is a problem. When your equity is going down, there is a problem. When your income is coming down, problem. Expenses going up, problem. Let me give you one example. In University of Ghana, one of the questions we said, we will give you a plenty story, like a story, and we will tell you to identify the audit risk inside the story. Now, for example, let me give you this example. Let's say a company has a car, all right? And for the past 2 years, the car has been going for repairs so much. So let's say we bought the car at 100,000. And for some time, the car has been going for repairs. We've spent like 120,000 repairing the car. Now, if I ask you to identify audit risk in terms of this, what will you say in that story? That you see that the repairs and maintenance expenditure is high on the asset, and I ask you to identify audit risk. How will you spot it? Under what angle will you see it from? Yes, what angle will you see it from? Because this is your exam question. That's how it is. You are supposed to spot the issues. Yes, please, quick.
Please repeat the question.
What that I said was that you have an asset. The repairs and maintenance on the asset is rising. The expense on the repairs and maintenance is rising. If we ask you to identify audit risk in such a scenario, what will you say? Yes, what will you say? And let's fast with it. Yes, Osman.
Yeah, I think the audit risk is on financial, because you could see that the continuous maintenance on the vehicle is leading to an increase in expense.
Yeah, it is a risk. I understand it is increasing an expense. So what will it do to the company? So long as the company keeps increasing expense, at the end of the day, what will happen?
At the end of the day, the company can be liquidated.
Exactly. So that is what we are talking about. And that is what we mean by going concern. When we say, and we will do it later, so I just don't want to go into it like now. Going concern simply means that there is the assumption that the entity will continue to be in operation for a foreseeable future, and there is no intention of management to seize that assumption. All right. So it means that so long as you are spending, you realize that it will turn your profit to become a loss because you are spending too much. The value of your asset too is impaired. So when you read the question, be careful. You see, I think that sometimes most of you are expecting a direct question. What is this? Explain this. We don't do that in advanced audit. No. It is a case. You have to be able to fish out the thing and talk about it. Basically, that is that. So whenever you have an issue like of going concern or inherent risk, explain the thing to the extent that it will lead to the shutting down of the company. If your assets are falling, at the end of the day, you will not even have assets anymore to run the business. If your liabilities are increasing, you go bankrupt. So, and it will seize the company. If the people who put money into the company decide not to invest money, equity is coming down. It will lead to a shutdown of your company. If your income is always running at a loss, especially those who do corporate reporting, you realize there is something we do called business reconstruction and reorganization. If your retained earnings is always a loss, it will lead to a shutdown, liquidation of the company. So, guys, open up your mind. Don't box your mind up. You see, you are professionals now, so you need to bring experience into what you write. All right. So that is what you are supposed to lead your answer towards. Yes, of course, expenses is going up, and so, so the more it goes up, explain it to the fact that it is going to lead to a shutdown of the business because it is going to increase your expenditure and run your profit into a loss. That is a risk. All right. That is the risk. So, for example, we are saying that we are talking about this thing in terms of marriage. So, if you are married, and like today, my professor that I went to class with was telling the young girls in the class that if you use assets, he asked them that what are some of the causes of depreciation? And one of the students says that the level of usage. If you use the asset so much, it will depreciate. So he was telling them, especially the ladies. So, as the guy said, if you use the asset too much, it will depreciate. And it was an advice he was giving to them. It's just that it's an indirect way of giving the children the advice like that. So over here, when you come here, you see the way the student dresses. In fact, if you have been into Legon, you will see it. So you will see it. And he was telling them that very soon, all these things that you people address, the way you people address, showing your stomach and all those things, very soon it will all depreciate. They will all depreciate. So what are we saying? What we are saying is that when you read a question, look at what is happening to the things and talk about it as a risk. All right, it will lead to a risk. So, like we are saying, then in terms of marriage, let's say you marry someone, the person's financial issues are not going well. All the time, the person is an expense, parasite, expending. The income she brings in is less. What will you say? Won't you say, this one there, I'm regretting marrying the person? That is where the thing of marrying a wrong person come in. That is it. The person is just all about a liability. That is it. So take note of that. Operational issue, we are talking about things like loss of key staff. You have a staff that is doing well, but the person resigns. Whether you like it or not, it will affect your business because you are going to bring in a new person who will start making a mistake. And the fact that the person is making a mistake in your financial statement means that the risk will go up. It's as simple as that. I think that is it. When you started job or working at a place, didn't you make so many mistakes and you learn from the mistake and you are now a perfect person in terms of what you do in the office? So that is how it is. So if you lose key staff, it happens to you. Then we are talking about breakdown of operation breakdown. Now, let me ask you a question. How does operation breakdown lead to a shutdown of a business? How can it lead to a shutdown of a business? If your operations are breaking down, how can it lead to a going concern issue? How? Yes.
You lose customers.
Exactly. And the fact that you lose customers means that your revenue is going to go down. The person has come. We want the product. You said, oh, machine has broken down. So we couldn't produce. The person will go to another person. And once he or she gets the supply from that other person, you are gone. So when you are answering the question, answer it to that level. That level. That's it. All right. Lastly, let's look at the reputational or compliance issue. So here we are looking at issues like you not paying your taxes, you not going by the laws and regulations. I think we mentioned those things before. Non-compliance of laws, bad image. Bad image. Anyway, how can that one too lead to a going concern problem? These days, everybody is doing sustainability. You are not doing proper sustainability things. Ethics are down, all those things. How will it lead to a going concern issue? How? Yes, how?
Bad image means no one will trust you with their business, which means you lose customers, which means you lose money.
Exactly. And non-compliance, if you don't pay your taxes, Mr. Bishop is here. They will kill you. GRA will kill you. Yes, they can seize your assets because of your non-compliance. So it will affect your business, whether you like it or not. A bad image is IAS 38. Non-compliance is IAS 37. All right. So basically that is that. All right. So an IAS 1, all these things going concern IAS 1. All right. So take note of that. So when you are explaining your answer, just understand what you are doing, all right, in the question. Now, you see, the lady has all these faults, all these problems. But that same lady must work towards solving the problem. If a company has all these issues, then the company must have a control system to check these issues, especially internal control. So a company must have internal control systems to check all these things. Internal control have 5 components. 5 components. It has 5 components. And when you are discussing the 5 components of audit, internal control, you can talk about management attitude towards ethics. So we are looking at the corporate level. So the company, like you, the management, what is your attitude towards ethics? So we call that one control environment. I've always said when I'm teaching this that if your manager comes to work at 8 o'clock, who born you to be late? How can you be late? But if the manager is not coming to work at 8 o'clock, people take the opportunity also to try and be late. So the control environment, we are looking at management attitude, the management attitude towards ethics, their attitude, their awareness to ethics. All right, that is that. Number 2, another component of internal audit is what we call risk assessment. Risk assessment. And in audit, when we talk about risk assessment, we are talking about the relationship between the risk and the financial statement. So, for example, if somebody is stealing cash, how does the stealing or the fraudulent activity affect your cash balance? So, how are they able to assess it? Some people, when the stealing happens, they said, "Oh, no problem. Anyway, you let's leave it to God." Okay, no problem. It would definitely affect the financial statement. Your ability to relate the thing, the relationship between what has happened and the financial statement is another component of internal control. You need to have that thing to have a proper internal control process. All right. Then number 3, we talk about control activities. So what are you putting in place? Control activities. You see, there are 3 types of controls. We have the preventive control. So what are you doing to prevent it? Preventive. So this one, the things that you put in place to make sure that the misstatement does not happen in the first place, or even if it will happen at a minimal level. What are you putting in place so that it won't happen? In my experience in an office, what you do is that the data entry can be done by anybody. The data entry can be done by anybody. So you see, the person who will put in the data, the input, will be different from the person who will approve it. All right. And there is somebody who will audit it. So when you put something into the accounting software, somebody will audit it. So normally we have officers doing the input. We have supervisors doing the audit. Then we have the finance manager approving the transaction. When these things happen, then it will now hit the trial balance and the financial statement. So that is how a proper office setup should actually be. So somebody comes to your job is that you audit what people have been doing. And that is a function of the internal auditor, that aspect. So if it is properly audited, the financial manager or the finance manager can give a go ahead, and that thing is posted into the financial statement. All right, so that is that. Number 4 is always about information and communication, ICT. information communication technology. In the office, how is communication done? These days, some people use WhatsApp as a means of official communication. You see, so there has to be a track record of communications that has happened. All right. So the information system, how does the system work? All right. Then monitoring is the last thing in a control internal. So these are the 5 elements of internal control. But the types of control, we have the preventive, we have the detective, and we have the corrective. So if you could not prevent the thing from happening, you should see it. And one of the things we do under the detective is the bank reconciliation statement. So if you could not prevent the error, the bank rec should help you see that there is an error in the financial statement. Now the corrective things, right? So here we use policies to check the preventive policies, all right? Then the bank recon. Then here, corrective is in the form of punishment. Punishment. This is what it is said that Ghana is not good about. Temper justice with mercy. That's what we do here. All right. So you see, when we were here when Trump was doing campaign and he was nearly shot, and people were calling for the sack of the security agencies. Did you see that? Some even resigned. They don't want any problem. But in Ghana here, I don't know if you guys remember that when our finance minister, right, plunged us into DDEP, and people were calling for his sack. You heard the stories that happened from it, right? One of the MPP people came to sit on television and confirm that because he feels like because he led that Ken must go thing, he was poisoned. Did you hear that story?
Yes.
Yeah, he came to confirm. So that thing, you see, corrective measures, the person is not doing it, sack the person. Let the entire nation will be fine. We will be fine. Just one person for the whole Ghana to be fine. You say no. So those are the problems. So for me, I believe that these are some of the reasons why they lost the election. It's a clear thing. Because you can't take my money and still expect me to vote for you. How? Come on. It doesn't work like that. So these are some of the things. So correct the thing. Scapegoating. Somebody did the thing. You punish the person. If the next person is coming to do, that person will choke. That's how it works. All right. So if you know that you, the woman, you have these attitudes, develop control system to check the attitude. Develop control system to check the attitude. The last one is the detection risk. This one is the auditor specific. So detection risk, what would the auditor do? What will you do? So there are basically 2 things. This is coming from the sampling of the auditor, sampling. Because you, the auditor, you are going to sample some of the issues. The problem is that, the danger is that you can sample those ones that don't have problems. And you think you will conclude that you generalize that, oh, everything is true and fair. But at the end of the day, it's not true and fair. So here, the main issue about the detection risk when it comes to the auditor side is that we are looking at the test of control and substantive testing. The test of control. So here we look at analytical procedure and the auditor's test of details. When we say test of details, it means 2 things, just test of control and substantive testing. Now watch this. Watch this. We will learn this substantive testing, a detail of it next week. So this is the position of the auditor. Have you seen that? This is the position of the auditor. This is where he is. Before, and you see this is the class of transactions. This is where the debits and the credits are happening. This is where they post the things, the transaction. Now, before you can audit the transaction, the auditor must pass through the block. This block. Have you seen that? Must pass through the control block. So before he can get to where the transactions are, he needs to first test the controls, work on the controls before he comes to this side. So there is a middle part, which is the control. There's the middle part, which is the control. So there is a saying that if the controls are strong, if the controls are strong, if the fundamentals are strong, if the controls are strong, the auditor needs not to do much of the substantive testing. No, you don't do much of this. The substantive testing is the one that they will bring all the invoices, bring me this invoice, let me check the receipt. Next week when we are doing it, you will see. Let me check the receipt, let me go to the site to inspect the project, let me do all those things. But you see, if the company has proper control system, a proper internal audit system, the internal audit would have actually checked these issues before the auditor will come in. So the paper that I'm working on now is about internal audit effectiveness. Internal audit effectiveness. If you have a strong internal audit system, and my focus is on Ghana public sector, because per the readings, if you check the Auditor General's report, you realize that there are all sort of misappropriations and all sort of things that are going on in the government sector entities. And why? And the Auditor General always reference the internal auditor. They reference the internal auditor. So how come things are happening and there are internal auditors? Don't they check the transactions before it goes through? So why is it that every time the Auditor General is having issues with the public sector, always about more practices or misappropriations and fraudulent things happening in the public sector? Why? And there effective internal controls and their internal auditors. So why do we have that? Is Madam Edna in class? I think she didn't join today, right? I would have asked her. She is an internal auditor for us here in Legon Business School. So, and when I'm reading, I will check if there are such issues because KNUST is there. KNUST happens a lot.
Mr. Tom.
Yes, please.
For internal auditors, myself, I'm an internal auditor with Ghana TV. But the issue is we are not from internal audit agency. And so whatever transaction
You said you are not from internal audit agency.
Yes.
Is that what you said?
Yes.
Okay, thank you. I'm doing a research on that, so I'm writing it down. You are not from internal audit agency. Of course, you cannot be from internal audit agency because you are not a chartered accountant yet.
No, I think my boss is chartered, but
Yes.
he is also not with internal audit agency.
Oh, why?
So what happens there is that we are recruited directly by Ghana TVET. And so
also TVET employs you.
Yes. So
is it under local government?
No, it's under Ghana Education.
Ghana, oh GES. All right.
Yes. And so you can't probe your director and scrutinize him or her. Indirectly, you're under her, so your powers are limited.
Yeah, this is not the first time I'm hearing of this issue, and that is why I'm doing the research that I'm doing. So one of the things one of the variables I'm bringing into the research is your independence.
Mm-hmm.
Yeah. In fact, it is not only you. I've had this class several times, and it has been an issue. One of the issue was that you guys are not placed, like you said, you are hired directly under TVET. So let me give you this example. When you charter, you will still be under TVET.
Sure.
And your salary will be determined by TVET.
Yes.
But you have a fellow chartered accountant who is at audit service.
Yes.
You are all in
Yes.
public service, right? You are all in
Yes.
public service. So
Yes.
this thing, what do they call it? The salary system, single
Structure.
spine, or what was that?
Yes.
Yeah,
Single span.
yeah, should have actually put you on the same scale. But it is not like that.
Mm.
So the guys told me, one of my classes, they told me that, of course, they did this thing at UPSA, trying to tell the government that they should correct this error. Because you see, you, when you charter and you are still under TVET and it is not going well for you, you would want to be moved to audit service or controller where they are properly paid well. So you realize that the people that will be left under the internal audit in the public sector, now, apart from the fact that you are hired by TVET, the body that regulates you is not helping you. So your boss, for example, should be part. Even me, that I am not in public service, I'm part of IA. So long as you are a chartered accountant, you just have to register there and be part. That is it. So that if issues happen and you stand up to your director and issues happen, the agency can come on your behalf. And the agency is a professional body. So these are the things. And what you are saying is true. You can't question your director. That means that you want to be sacked, Abby.
Yes.
Yeah, I've seen the independence of the internal audit unit is one of the major problems. When you are reading the literature, that is what you see. So sometimes they don't even show you the thing; they just go and do it.
That one.
Yeah,
Our place, you have to sign, you append your signature. And so
yeah.
they come and they are standing on you, and it's like, it's from madam, so, or it's from
Uh-huh.
boss. So it's
Uh-huh.
like they stand on you. So you don't even have the opportunity to calculate and probe and maybe things they don't even deserve. You cross it and write it. And if you dare cross it and write it, you'll be called directly. And if
In fact, I'm not surprised because I know a chartered accountant who is staying at home and earning her salary. Why? Because she did what you are talking about. She stood firm against the director. In fact, this was even the minister himself. And the minister didn't like it. So the minister transferred her to another ministry. When she went to that other ministry, they said that she is at the board level. They said that that place is occupied. So she's at home, but she takes her salary. Yeah. And these are the things that happen. And these are all the reasons why I've told you. So for some of us who are into these things, we know a lot. And that is the reason why this political party was punished severely. These are some of the things. Because the things were done by the ministers. Yeah. So these are the things. And it was that bad. So you could see that if the internal audit is strong enough to resist some of the things that are happening, then it means it won't happen. Of course, it means that right now you need empowerment. The internal audit agency as a nation, we need to empower the internal audit individuals in the various offices. That is it. I can guarantee you that it gets to a point where you get fed up. And so you say, oh, let it go. If they say you should sign, you sign. You want to come to your work and sign for them, and you take your salary and it will go. It's just that the thing, it goes round and come back to bite us. So I think that is it. So me, it is on my heart to pursue that paper and push that agenda seriously. Seriously. Yeah, so it's true. What you are saying is true. This is not the first time a student is telling us this. It happens almost every sitting, and the pain with which they say it, like you are, is it the way you said, Madam says, that kind of thing, that kind of thing. Because from the minister, you come to the deputy minister, then you come to the director, the chief director. That is how it works.
Yeah.
So they are close to the app. If you don't take care, they will find a way to even put you into trouble. These people, yeah. So basically that is that. But academically, what we are trying to say is that if the internal control is strong, or so you saw what we are talking about is management attitude and awareness. So that is it. Management attitude. Some people don't care. That is it. If they have proper attitude towards ethics and how things are done, they will allow the internal audit people to actually do the right thing. Yeah. So basically, that is that. If Edna was to be in class, I'm sure she will also say the same thing. I'm sure. In fact, when they were recruiting me at Legon, and I realized that she is in this class, I think I had my letter. That's last somewhere in October, and it was retrospective September, I think so. And at that time, I think she passed through, and already because people were joining class, they heard about the name. They wanted to buy my audit book and corporate reporting book, and so I asked for the location, and she said Legon, and I'm like, oh, which part of Legon? UGBS. Oh, me too. I'm at UGBS. So when I was supposed to submit my acceptance letter through the processes, she was one of the people that made it a quick pro. Yeah, fast. I'm sure some of my people didn't even receive their salary, but me, I received my salary. Yeah. So those are the things. The internal audit plays a key role into what we do. Everything. She would have probably, I don't know about this place, but I read this case about KNUST. I'm here to read about Legon here. Yeah. The management attitude to that. But I suppose that here there are so many professors and doctors. They will allow you to do the right thing. They should have a proper attitude towards that. So if the auditor's work will go well, sometimes it depends on the internal control process of the entity. All right. So the auditor must first test the controls. So this is the first thing they do. They will test the controls first and know if the controls are strong, it means the substantive testing will be down. But if the controls are weak, it means that they need to do a detailed substantive testing, much substantive testing. The audit work will take a very long time. That is what happens in there. So this is audit risk. This is audit risk. Any question on that? Any question on that? So that is the second part of what we wanted to achieve. Then quickly, let's go to materiality. It's a very simple thing. I think I'll finish exactly in time. Oh, so you see, when I'm mistakenly, I just press this. You see, this is it. I'm reading some articles on it. What you are saying is not different. No, even this one is in Asia. This one is in Asia, Iran, and the same stories you say is the same thing everywhere. These people too mention the same thing. The same thing. The factors that affect internal audit effectiveness. It's everywhere. It's a global problem. If you read the literature, you will see it's a global problem. All right, so let's talk about materiality. Then we can chalk. I'll give you the process of answering these kind of questions. Then we will look at examples and next week. Please, most of you have not submitted on the work that I gave you on the first part, the part A that we have done, that is 30 marks. Most of you have not submitted your solutions. Please do well and submit. It will help you a lot. All right. So now, let's look at materiality. It's a very simple thing. And there are some things that you may have to memorize. Materiality. What is materiality? When we say something is material, it simply means that an omission of that thing or a misstatement of that thing can affect your decision making. So usually when we are in the relationship and somebody says something and doesn't give you the entire information and omit some part from it, it's very, very painful. I think you can testify to that. When you are short-handed with information, it's very, very painful. So we say when something is material, when a misstatement, when you misstate that thing, or you omit that thing, when a misstatement or omission of that thing, whether individually or aggregately, whether individually or aggregate. So if you mistake that thing individually or aggregately, it could affect the or influence your economic decision making. So materiality is when a misstatement or omission, whether individually or aggregately, could reasonably affect your economic decision making. So that is it. It will affect your economic decision making. So they said that these two people are coming to marry. The pastor's office is open 24/7. If there is anything that you have that will prevent us bringing them together, come and give the information to the pastor's office. If you don't, the marriage is happening. So if you omit it, it is making the marriage happen. Yes, don't come later and tell us all those things. I knew that, I knew that. You didn't say it in the right timing. So basically, that is that. That is that. Now, that is materiality. So whether individually or what do we call it, or in aggregate, if affect the financial statement or it affect the decision making of the investor, then that thing is material. All right, so that is materiality. So when you are gathering evidence in the audit process, find out if the thing is material, because if it is material, then it means that it is going to affect the auditor's opinion. All right, so take note of that. All right, so materiality is governed by ISA 450. Let me add that, ISA 450, and that is what it talks about. But not only does ISA 450 talk about materiality, it also talks about performance materiality. Performance materiality. And that thing talks about this aggregation a lot. All right, it talks about, you see, let me give you this example. Not long ago, there was a report in the news that one banker, a teller, was stealing 0.01 pesos on people's account, people's bank account. Now, all those of us who are here, if you check your bank statement and your bank statement is short by 0.01, will you be concerned? A pesos have left your account. Will you be concerned?
No.
You won't. You won't. You won't even be bothered. But guess what? The bank, this guy was doing it on all the customers of the bank who are close and more than 5 million individuals. Now multiply it and see. You realize that this guy was earning around 50,000 Ghana cedis, right? A month. Check it, multiply it. 50,000 Ghana cedis. Yes. How much is your salary in a month? That is what he was doing every month. And he was earning this thing aside his salary. But you see, nobody checks. You will cry, you won't even be bothered. You won't be bothered. So it was one person that started this thing that said that, I've seen my account, and every time I see that there's a 1 peso missing on my account. Why? Then they started checking. checking, and the thing has been automated into another person's account. So that is it. So in as much as individually this thing is not material, in aggregate with the entire people, it is material, and that is why performance materiality becomes very important. Because what performance materiality is saying is that you are setting an amount below materiality level for the financial statement, so that you reduce the probability of the aggregate misstatement exceeding the materiality. So we are looking at the aggregation. So you set an amount. So setting an amount. All right. So it's an amount set below materiality of the financial statement, for the financial statement. So if individually the thing will not be material, then the entire financial statement, we should have a materiality level for it. Because if you limit it to materiality in asset, the thing will not be material. If you limit it to, let's say, liability, it will not be material. But when you put them together, you realize that it is what? Material. So that you reduce the probability of aggregate materiality. So basically, that is that you are setting an amount, a level for materiality. So that is what you are doing. An amount below the materiality of the financial statement. All right. Basically, we say to reduce probability of aggregate misstatement. Exceeding materiality. When you put it together, that is what is going to happen. And so the COSO standard for that, for materiality. You see, materiality, first of all, let me, even before I forget, there is qualitative materiality and quantitative materiality. Qualitative materiality and quantitative. Now, the qualitative is, if something is qualitative, it's very, very difficult to measure. So the qualitative focus on, let me write the word well, qualitative. The qualitative, it focuses on economic impact. Let me give you an example. You see, somebody like former President Akufo-Addo, any word that comes out of his mouth is material. Any word that comes out of his mouth. And that is why people were so judgmental on him. So whatever he says is the gospel. Yes, because it has economic impact. That is it. So we are looking at, so even the nature of the person, the size of the person, it can affect the materiality. So qualitatively, whatever a statement is made and the impact of that statement is very, very important. But let's look at the quantitative. The quantitative is mathematical. You can quantify it. And that is where we use the COSO level, quantitative. So here you are looking at, and please, this thing, you have to memorize it. Profit before tax and even profit after tax. So you can put it together as profit. So profit together, whether profit before tax or profit after tax. The materiality level is 5%. So if there is a mistake in the financial statement, then you calculate it and you realize that it is 5% or more, then it means the thing is material. We will do some exercise. Next week, this will be our major focus, how we answer these kind of questions. Then again, you have revenue and gross profit. Revenue and gross profit. Those ones too is 0.5%. I'll give you a short example, show you how you answer the question, and next week we will do the practice of it. Then we'll conclude our class with evidence. So I will use 1 hour to solve questions. Then I will use the other hour to teach you how you answer how evidence question. All right. Then net assets. Net assets. Please memorize this thing, or I will ask you next week. 2% or more. Total assets. Total asset is 1% or more. So that is that. All right. So these are the things you must focus on. You see, these things, you are going to use them to answer audit matters questions. So like I told you, all the things that I wanted to deal with you today, these were them. So you see, we've done audit planning and we have concluded with risk and materiality. We are using that one to answer audit matters question. Audit matters question. Now, how do you answer the audit matters question? How to answer audit matter question. You will see in your exams all the time, the audit matters. How do you go about it? Answering audit matters. How to answer audit matters. I told you that this is the point where if you are not doing corporate reporting or financial reporting, it becomes a little challenging. Yeah, it becomes a little challenging. How to answer audit matter question. So step one is that you are going to identify the issue. So that is that. That is what you do. Your first step is to identify the issue. And what do I mean by identifying the issue? You have to put a heading to that. You have to put a heading to that. And I'll give you an example so you see what I'm talking about. So please, when you are answering, apply the steps. So identify the issue. And normally, your examiner will let you see the issue. All right. You identify the issue. So the issue will be your heading. The issue will be your heading. So you do a nice heading and underline it. All right. Step two, identify the relevant accounting standard. Relevant accounting standard. But if the question is just about audit risk, you don't need a standard. So identify relevant accounting and auditing standard. So this is specific to audit matter question. So we will do an example right now in 5 minutes, then you see what I'm talking about. All right. So when you identify the accounting standard, whether IAS, IFRS, or the ISA, International Standard of Auditing, well, the next thing that you are going to do is that you are going to show us what the entity have done, the misstatement of the entity. Is it leading to, so is the misstatement, identify the effect of the misstatement, effect of the misstatement. The effect of the misstatement. And the effect, there are only 3 effects. It's either the thing is leading to an overstatement in the financial statement, or the thing is leading to an understatement. Or under disclosure. That is that. Step 4. is to assess materiality. So this thing that you have done, the quantitative materiality that you have done, you can actually exchange step 3 and 4, but it's the same. Assess the materiality. So is it material? How will you know it's material? You are going to measure it with these things that we did. That's why I said this thing, you must keep it in your head. You must keep these things in your head. And it comes, you can keep it by practice. All right. When you assess the materiality, so you can actually interchange. I can bring the step, I can make this one step 4 and make this one step 3. So last one is that you state the correct thing to be done. State the correct thing. That's all. These are how you earn your 20 marker question for each of the questions that you've been. Okay, so let's deal with this example and let's apply these 5 things. All right, so let me give you an example. So an entity bought PP for, let's say, 100,000 cedis. Okay. And was given a trade discount for 50,000 Ghana cedis. All right. At the reporting date, it was ascertained, so it was ascertained that the asset was recorded at a cost of 100,000 and depreciated likewise. With a useful life of 5 years. The 50,000 was treated as a discount received in the SPL. Required. Discuss the audit issues. Or the audit matters. Discuss the audit issues or audit matters. Wow, this thing just reduced like that. All right, 8 marks. Okay, so what are you going to do? How are you going to approach this? So we said that in approaching this, number 1, we should identify the issue. Okay, so the issue will be, the issue here will be measurement of the cost of PPE or treatment of cost of the PPE. Of the PPE. So that is that. So you say that, probably underline it well, but in the exam, don't underline anything. You just write it on one line and leave it as a heading. All right, so that is that. Don't underline anything, because this is your exam question answer booklet. It is having these lines. All right, so identify the issue. Step one, you've done it. That's it. So sometimes the examiner even will give you the heading, so you can put it there. Step two, identify the relevant accounting standard involved. What's the relevant accounting standard? Yes, what's the relevant accounting standard? Let's go, fast. You have a little time, like 3 minutes. Mujib.
IAS 16.
IAS 16. So you have seen that it is IAS 16. So what you are going to do is to state the provision of IAS 16 concerning that issue. So what does IAS 16 say? So according to IAS 16, so that's how you start. According to IAS 16, PPE, you have to write everything: property, plant, and equipment. All right. What does IAS 16 say in regarding this issue that we have? What is the problem? What has been done wrong? Yes, you've done IAS 16. So you see, this place, your knowledge about corporate reporting is what you are doing. Because you are an auditor, auditing how somebody has, remember, we are doing audit of financial statement. And this is what the people have done in their financial statement. So you are, and so you will see that in the exam question, the examiner will add something like this: asset, total asset. You add that, total asset. You add something like let me put, let's say 500,000. Then you add profit of, let's say, let me put profit to be like 100,000. You add it, you give it to you in the question. So now, anyway, with this issue, what is wrong? What has the entity done wrong? Or what have they done correct? Yes. Please, let's be fast. It's almost time. Let's be fast. Yes, you've done PPE. So how does PPE recognize cost? What are the elements of cost? Yes. Or you've not done PPE. Mujib, you said IAS 16. So what do you know about IAS 16? Can you help us? Quick, let's go. There's no need to waste time. Let's go.
Cost comprised of it comprised the purchase price and then plus any direct attributable cost of bringing the asset to its useful stage.
Is that how you were taught in PPE? So you see, is the thing that I always tell students. This corporate reporting you guys do, it is law. It is not just about what you think or how you feel, or it is law. You don't omit some of the statement. What you just said, you didn't complete it. And the way you say it affects the way you calculate it. So when you are learning law, you don't learn it in peace. Like you don't, if it is Kofi is going to school at Tamale, that is how it has to be. It shouldn't be Kofi is going to school without a Tamale. That's how law works. You have to state it as it is. It is not purchase price plus direct cost. No. That's not how you were taught. So it means there's a problem in the learning. It is purchase price less trade discount before what you said come. So if you decide to leave some of the statements from it, you can't do this work. That is it. We less trade discount. And please, that means that you guys need to take care of, because the CA is not merciful like that. It's not merciful like that. So cost is purchase price less trade discount. So that means that if I have added even a cash discount to the question, it would have been a problem. Purchase price less trade discount and refundable taxes plus direct expenses incurred in bringing the asset into its useful state as intended by management, plus present value of future dismount. All those things are there. You can't leave some and say you lent. No. It doesn't happen. And you see, the fact that you said that and the fact that it tells me simply that you have not practiced solving questions. Because if you have done that, you would have faced these things. And it is dangerous. So guys, let me be sincere to you. CA, if you don't learn, you can't make it. I tell you the truth. Even if we give you the apport to the question and you didn't learn, the apport you have, a sentence will change in the main one, and you will be writing the answer of the apport like that. Yeah. So please be very, very careful. Okay. Be very careful. So if you know that it is the purchase price less trade discount, and at the end of the day, the entity carry the thing at that purchase cost of 100, you see, they are wrong. It's supposed to be 100 minus the 50. So what they are supposed to have is 50, and they are supposed to depreciate this 50 over 5 years, which means depreciation is supposed to be what? 10,000. The fact that they carry the thing at 100, it will make the depreciation be 100 over 5 years, which is how much? That's 20,000. Is that not it? So it means they carry the depreciation of 20,000 instead of 10,000, meaning that when it comes to profit, they have what? They have actually reduced their profit by 10,000, because this is an expense. It is going to reduce their profit. So they have understated profit. So when you do the difference of the mistake that they have done, which is also 10,000, you will take the 10,000 and divide it by profitability, which is 100,000, multiplied by 100%. And that will give you what? What would that give you? Is it 1%? Calculators, please. 1 over 10 is what? So please, you have to carry.
It will be 10%.
Yes, it will be 10%, 0.1%. No, it's not multiplied by 100. Yeah, it will be 10%. So that will be 10%. So this is 10%. The asset too, the asset that you saw that they carried at 100,000 should have been 50,000. This is it. Should have been 50,000. So if it was 50,000 and you take the depreciation from it, the balance will be 40,000. That is the correct thing that should have been done. But since they did 100,000 and they depreciated the amount five years, and they had 20,000, their carrying amount to be what? 80,000. The difference of an error of an overstatement of asset by what? 40,000. Then you will divide that one too by total asset. How much is that? What is multiplied by 100%? What will you get? That should be like around 8, right? That should be around 8%, right?
Yes.
That is it. So now, so you've seen what they've done wrong. So you will write, according to IAS 16, the cost of an asset or of a PPE, okay, of a PPE is measured at purchase price less trade discount. All right. The entity didn't do so. So in this example, in this case, the entity did not do so. You have seen that. Yes, so you have seen the issue. Now, as you saw the issue, what is the issue? What is the effect of the issue? So this will lead to, you realize that. So that was what I was saying, that you can actually bring the materiality calculation in step, what do you call it? Step 3. I think that would be preferable. You can bring that one into step 3, because per what we are doing, that is what we've done. Can bring it to step 3. Oh, sorry. Like I said, you can interchange it. So you can bring this one to step 3. All right, call this one step 3 and this one step 4. Then you can make this one a step 5. So you calculated the materiality. And so you are going to say that this is material, all right? Or you could still do the same thing, all right? Like step 4, it doesn't matter wherever you want to put it, whether. So you realize that this led to, you saw that the asset was overstated. An overstatement in the carrying amount of the asset. So audit is not that easy as sometimes because of some of these things. In the asset, and an understatement in the profit. So this is material. So when you did this one, the materiality was 10% and this one is 8%. So you go to this one, the materiality thing that we did. So total assets is supposed to be 1%. You had 8%, meaning the thing is very material. Profit is 5%. You had 10%. So it means in both cases, they are material. All right. So you have to state that these were material errors. Material errors. And would affect the auditor's opinion. Which type of opinion to issue? We have not done it yet. When we get there, we will bring it in. The auditor's opinion. Now, lastly, you tell the examiner, okay, so when you say it is material, bring in the percentage, all right? Bring in the percentage. This is 8%, the other one is 10%. Now, the last thing is that you tell them the correct thing to do. So you say that the trade discount should have been deducted from the purchase price. All right, so that is that. Okay, so that is what you are going to do. You see, it is really a corporate reporting thing. So if you know the standard, you don't struggle. So the standard are not only useful in corporate. That's why personally, when I'm teaching the standard, I take my time because I know that I'm not only teaching corporate reporting, I'm also teaching audit. So many things people don't teach, I teach. And so it will be very sad that when I have taught it and students don't take it serious. It will be very sad. All right. So that is how you approach our next week. So please, and I've given you some assignments with some of these things involved. If you check your class dress document has all these things. So you can actually start practicing it before we come. Because next week, for the first 1 hour, that is what we are going to do. Brace yourself, please learn and join us in the class. That is how it is going to be. And these things are huge. It is always 3 in question 2. So 8 marks, 7 marks, 6 marks or so. Yeah, that's how it is. Then to total, it will be 20 marks. You can't decide from now to shorthand yourself from that. No. You can't do that. You can't do that. All right. So get prepared for that. And we will do more of these things next week. So I don't know if you have to watch over the video and get yourself prepared in that regard. Any question? Any question at this point as I'm wrapping up? Any question? Any question? Other than that, I will entreat you to take your standard serious because it has a lot there. All right. I'll entreat you to take the standard serious. So thank you so much for this evening. And I encourage that you go over this, especially the audit matters, some of the standards, because you are going to use the standard to actually answer these kind of questions. Every year, I try to predict the standard that will come. I try. And if you are fortunate and we get that one, those are the things that I will bring for your intervention, and we will do it. So once we do it and you go and you meet the same kind of standard, you know exactly what to write. All right. So basically that is that. Okay. So that's it. In the absence of any question, I think it is late already. So you can have your rest and get prepared for next week's class. All right. Thank you.